And everyone, it's Tim Reazor with Revere Asset Management just before 3:30 here on a Wednesday night. So very quickly, stock news, market levers before you and I begin. Look, couple phases to this video tonight. So real quick, I want to talk about the indices. Okay, so we're talking about the indices and where I think they're headed. There are 11 major S&P sectors I want to talk about with you, and there's 3 that I think are getting ready to make employees move higher. So we're going to talk about let's call it SPY sectors. Okay, we're going to do that tonight. And there's some things I think you should be aware about that look like they're ready to pull back. And if you're in those, maybe you want to consider monitoring those, trilling up a stop potentially. And then we'll talk about Bitcoin and where I think Bitcoin's headed. I like it much higher here. So we'll get to all that in just a few moments. But real quickly, stock news, market levers. The podcast, man, these last 2 weeks of podcasts have been awesome. I say that because when I enjoy the show, I know stock news, market levers enjoy the show. And these last 2 shows I really enjoyed, and I've got some real positive feedback on these shows, and I appreciate you tuning in and listening every week. And then stock nerds, listen. Any questions, concerns, comments? If you take umbrage with anything that I'm saying, all you have to do is email me, tim@revereasset.com. What separates us from every shop in the world, from your strip mall advisor to someone in their ivory tower, look, these are the guys right here, Hunter, Alex, and Don, making the portfolio decisions, making the buys, the sells. All the decisions get made in the portfolios are these guys, and you, as a viewer of this video, have access to them. We do not play the plausible deniability game. We don't play the mutual fund game. And you're like, what's the plausible deniability game, Tim? Oh, it's when you go to your strip mall advisor and say, hey, I'm not happy with my performance. And the strip mall advisor says, well, we're going to fire such and such, and we're going to get you in a new mutual fund. Shame on him. And you're never going to talk to the strategist. You're never going to talk to the people that make the decisions. But at Revere, you actually get to do that. And that's a huge business differentiator that we have that others simply do not. So 855-732-5932 is how you get a hold of us. Email any one of us. And if you want to talk to America's fiduciary right here, Dan at revereasset.com, the owner of the firm, who's empowered us to go out and help stock nerds and market lovers with their trading and investing however we can. Can we make you better? Can we help? Can we be a sounding board? Anything that you need, we are absolutely here for. And then look, my email inbox fills up if you want to get a hold of me a little bit more quickly. TJ Reazor is how you find me. There's a number of people that do. I have a little trading group. Nothing special. It's always free. Just a bunch of stock nerds getting together. I call them the IPO Club. They talk stocks pretty much all day long. They're pretty awesome too. And so if you want in on the club, just shoot me a message at TJ Reazor, and I'll introduce you to a couple of the fellas and see if it's for you. Some of you can't get your market fixed the way you want. I'm telling you, these guys are doing rigorous research, and they're pretty awesome to boot. So hopefully that all helps and makes sense. And then stock nerds, market lovers. These videos, they are for what? Your edification only. They're never ever to be misconstrued as advice. If you want advice, seek advice. Please just give us a call again, 855-732-5932. So let's look. A number of you are familiar with my work, so I won't spend too much time on these charts. I'm a probabilistic trader. I think you should be a probabilistic mindset trader, meaning you're open to the probabilities of what can happen based on what you're seeing on the charts. And so when I look here at the mean, or based on the 21 exponential moving average, that's the mean on any chart of mine, whether it's a daily or a weekly. The mean here, you can see that you're stretched, right? You can see that you're absolutely stretched from the mean. Well, Tim, how can you see that? Well, I can see that the S&P futures have really struggled to make movement beyond this 2 ATR line. Well, what does that 2 ATR line represent? Well, it's 2 of these average true range zones. And so when someone says market is stretched, the market is tired, the market is overbought, they're just throwing out words. You and I, we like to see a picture of that. And you can see the picture is developing right here. And so can it get up to 3 ATR? Absolutely. You can see it did it. It's the April timeframe before pulling back. But I don't think the story is really the S&P right now. I think the story is the NASDAQ. And so we'll look at the NASDAQ. And the NASDAQ finds itself in similar situation, except it's above the 2 ATR, right? Kind of wicked up in the zone, close enough for government wick to the 3 ATR, and you can see that the stocks of the NASDAQ wick up to the 3 ATR a little bit more often than the S&P, right? You see the last time it did it was this July time frame, and then you pulled back, right? So how far did you pull back? Oh, not that much, 3%. That is nothing for a trader like you. And so what I want to point out here is where the indices are on their weekly time frames. And so look, you can see that we got up right into this zone. Doesn't mean we can't go higher tomorrow or the next day or the day after that. It just means that, look, when is the last time the market got the S&P, excuse me, the NASDAQ, this close to the 3 ATR or at it? When is the last time that happened? Oh, last August, a year ago. Okay, so we'll just do it from the 3 ATR line. Well, what does that pullback look like in the span of 3 or 4 weeks? You went down a little, probably a little bit more, 12%, 13%. See, it says 11.22%. Yeah, it's not really quite from the top, but we're playing grenades, not horseshoes here, and you get what I'm getting at. And so how about the last time that we wicked up to the 3 ATR? When was that? Okay, that was February of 2020. February of 2020, and you know what that was, of course, and you went down 32%. So look, what should you expect from here? It doesn't mean it has to happen, and it doesn't mean it has to be all hell and tarnation and everything's going, everything's just going to kaputs. It just means that maybe you trail up stops, maybe you understand timing of initiation of trades. Maybe you hold off. Maybe you don't. If you're going to start new trades, maybe you don't weight them so heavily. Like the opportunity in the NASDAQ is at the mean. The weekly mean to me is the opportunity. But look how few times it really traverses below the mean. And I did this. If you want to see this drill, by the way, if you want to see me do this, come to the website and look at the podcast. I show you why the weekly mean I think is like your best time to buy. And of course, you don't have to do it all at once, but look, this is the definition of stretched here. So you should not be surprised if you start getting a 3, 4, 5% or more pullback in the NASDAQ. It doesn't have to happen. It could just do this, right? Just trade sideways and let the average, let everything catch up. It's another way to coalesce. So look, we'll see what develops, but the situation is there right now. Let's look at the S&Ps here real quick. We'll do S&P futures on the weekly. Yeah, same kind of situation. Last time you got up into this area, this is not, look, this is not this major, right? This is probably, let's see what this was, 10%. So look, not by no means the end of the world, but if you're over leveraged or if you're in options and you're like heavy calls, yeah, you're gonna get dinged. It's gonna feel a lot worse than what it truly is. And so I want you to keep that all in mind. So look, let's take this down to a daily chart, and now let's run through the 11 S&P sectors that I look at every day. So XLC, yeah, XLC 3 ATR. So look, you know what comes next. When's the last time XLC got up to the 3 ATR? Pulled back. And so what does that pullback look like? And we're doing this roughly, it's about 5-6%. Okay, not the end of the world. The last time it got up in the zone of the 3 ATR, it pulled back to the, oh, that's not the best way to do that. Let's try it this way. About 3.5%. Again, no big deal. But if you're trying to time your entries or you're in the stocks of the XLC, they're going to feel it a little bit more. XLY, here's XLY. So XLY is right up there where consumer discretionary, right about that 2 ATR. This is really skewed heavily towards Amazon. And so you just want to be careful here with thinking that this is a diverse ETF. It's very heavily weighted. Does there room to go up? Yeah, but it's kind of struggling here. It doesn't really catch my fancy. XLP, yeah, a little bit. It's above the mean here. Could go higher. Last time it went up to 3 ATR. Pull back a little bit, but this doesn't really do it for me either. There's 3 that look better to me than XLP, which by the way are the staples. And look, if the staples start to lead, that typically is not great for growth. So just keep that in mind. XLE. Energy is failing at the 21. That's not a sign that I like. That's not strength to me. Came up here, tried, and now it looks like it's starting to fail. Oh, that's energy. Fintechs, XLF, or the financials. Yeah, these guys here pulling back to the mean. Let's watch that. That is on a daily chart, that's going to be your least risky point of entry. So I'll add XLF to this list here. So let's write that down because it was not on the list. It's 4 now. XLF is, so you want to look at the stocks of XLF and see how they're weighted. Okay, you can do that at etfdb.com. Do that on a bunch of sites. Yahoo has it as well. But look at how the stocks are weighted and then put them on a chart. The mean is typically your best point of entry, because you'll know if you start trading below this 1 ATR, it's failed, right? Or this prior low, it's a fail, and you can easily get out. If you buy extended, excuse me, as I take a sip of water. If you buy extended, like say up here, and it just does normal pullback, you might have been in the right property, just the wrong timing. The mean helps you with your timing to tell you when you're wrong quicker and when you're right to let it ride. So XLF, not too shabby. How about XLV? This chart I like. So bounces right off the mean today. I like this XLV chart. Let's look at this on daily. Not an average true range chart. A little slow today, Thinkorswim. Yeah, this isn't a bad chart, friends. And so XLV, I would say is watch list worthy. So we got XLF, XLV. How about the industrials? XLI. Oh, that's a chart. That's a good looking chart there, Ed. And so, yeah, it's just pulling back to the mean here. Can't really get much going here. Only 2 points off the high. So I don't know what your risk reward is here by coming into XLI, but you can definitely look at the stocks of XLI, see how they're doing. Are they at low risk entry points? Low risk entry points to me are in and around the mean. How about XLB? XLB. Yeah, same thing as XLV, same thing as a little bit of XLI, a little bit of XLF. That's a good looking chart. That's not extended. And it's not like when you look at XLC, it's strength in price that has gotten XLC to be extended. They're not bad stocks. I don't want you to misunderstand what I'm saying. It's what are the probabilities next that it keeps going? It could. It absolutely could. Or do we know around that +2, +3 ATR are things getting ready to take a break? So you want to find the ones that aren't extended but finding support their 21s. So you can see like something like XLI supported the 21. XLE, not, that is weakness on a chart. And you're like, Tim, it's so subtle. It's trading below the mean. It's trading below the 21. It can't find that support, and you want to see stocks that get supported at their 21s. How about real estate? This is the last one, XLRE. Yeah, this is extended. This is the definition of extended. And so can it go higher? Yes. You can make all the bullish points about real estate you want, but what's probably going to happen? Those same points existed here in June when it last hit the third ATR, and it pulled back. Well, Tim, how severe is that pullback? Oh, probably not that severe, 3%. But when you enter a trade in a stock that's in the XLRE, you're going to feel it a little bit more than just that 3%. They typically react much more volatile than just this broad ETF. And so you want to be just real careful about your entries right now, because the market is what? Extended. And so, oh, BTC. Let's look at Bitcoin. So, let me show you where I'm probably going to be hypocrite. It's at +1 ATR. I like to enter in down closer to here, but you're not giving it up, man. You're not giving up anything on this Bitcoin. And the next stop, so right here is where you're at. So if you can overcome, like everybody who they bought here and they just wrote it down, now you're at this point of resistance. If you can overcome that point of resistance, your next stop is up here in this zone, and that's probably 12,000 points higher, $12,000 higher. So coming up into that zone, if you can overtake the zone I just drew on the chart. So hopefully that helps, stock knows market lovers. I love you for watching the videos. I get a bunch of tweets, direct messages and stuff from you every week that I do the videos, and I really appreciate it. It means the world to me to have your support, your love. And so continue to send your questions. I'll always be here to help you. And by the way, your questions to me help me more than I ever help you. So I appreciate that as well. So thank you, and I will see you at the next update.